and welcome to another episode of Choose Your Destiny with me, your host, Nev Kraguljevic. And today is my absolute pleasure to welcome a new guest to the show, Eric. Eric, welcome to the show.
Hi, Nev. Thanks for having me.
My pleasure, absolutely. So, Eric, if you don't mind just introducing yourselves to the audience and just briefly tell us what is it that you do?
Yeah, you bet. So, Eric Levenhagen, I am a financial coach, and I help small business owners drive more after-tax profits into their business.
Fantastic. So, another soulmate when it comes to money. And so, this is going to be a fantastic show. You get to really hear and learn all kinds of cool things from Eric. So, Eric, how did you get started in this business?
Well, going back a ways, I guess, I started out, I always tell people I'm a classically trained CPA, even though I only use a very small fraction of what I learned obtaining that CPA in my current career. But I always had an affinity for numbers, although not as high as a mathematician. But at 16, I took an accounting elective, and I could really piece everything together. I really realized that I could look at a set of financials, and where other people saw kind of a numeric mess at times, I could really pull together a story about what was happening inside of a business to a certain degree, as much as you can with the financials. So from that day on, pretty much my track was set, and I knew I was going to be in this field at some level. And I'm sure we'll get into a little bit later how that has changed a little bit over the years. But that's really what got me going. Was it just came naturally almost.
Now, I'm going to ask a question that I think most of the audience is going to pick up and wonder about, because you had said something very cool here. You stated that you can look at financials and it will tell you a story to a certain degree of certainty of how the business is doing. Mm-hmm. Could you explain a little bit more? Because I don't know that everybody watching this may completely understand what you meant.
Okay, sure. At a real simplistic level is probably more so just taking a look at, how the business is structured. Are they profitable? To what degree? Are they structured as far as debt versus equity? Like, are they self-sustaining? Is the revenue line or lines in a combination that they're bringing on, or that they're working so hard to bring in, rather, really producing the desired effect to their overall company? I mean, those are just a handful of things that if you spend 5 minutes with a set of financials, you can really start to gain a lot of insight, right, about how the business is run, maybe about how it's been managed in the past, and like I said, whether or not it's profitable and or achieving the goals that that business owner really set out to achieve. Because a lot of times business owners, I find this to be true more and more when I get into more candid conversations down the road with business owners. Nobody wants to, I shouldn't say nobody, a few people have admitted to me right up front that they have no clue what's going on their financial statements, which is fine, because at the end of the day, that's not what they're trained to do. Other people don't really love to, especially those that, have been in business for a little while, don't love to admit right away that they can pull out a few key things that keeps them going on their financials, but they really don't know as a whole picture what they're looking at. And so just different degrees of candidness there, I guess you would say, but most people don't. I mean, unless they have a strong finance background, or like I said, it's just they've been in it for long enough, they've had a good teacher or mentor, or it just comes naturally to them to pull that all together. But at the end of the day, all that is a version of a reporting system that gives you a report that details results, just like a report card, right? It details results, but just a little more detailed than a standard report card, and you get in and really find out some a little more granular information about, like I said, how the business is operating.
Yeah, you said report card, and that reminded me of many viewers may or may not have heard of Robert Kiyosaki, who is the owner of Rich Dad Company. And so he's written a lot of books.
Mm-hmm.
And one of the things that he always talks about is that when you grow up and you run your own business, your report card is your financials. And so
Yeah.
you kind of really drew that line that reminded me of that, to say, he never focused on the report card from the school as far as the grades. He always focused on the report card in business, which was the financials. And
Right.
it sounds like that's exactly what you were talking about as well.
Yeah, absolutely. Absolutely.
Fantastic. So to just simplify a handful of financials for folks that might be this completely going over their head and saying, I'm not the mathematician, I'm not an accountant, I'm not a
Mm-hmm.
financier, I know nothing about it. But if you can give us, what are sort of the 2, 3 main reports that any business owner should at least understand that they exist and potentially learn how to utilize?
Sure, sure. Yeah, and a distinction should be made too that we're talking about kind of the standard set of financial statements. If you think about traditional accounting, which is not it has its use, right? Everything has its intended use, and for anything outside of that, we need to come up with some other systems and processes, which I help people with, to fill in the holes. But the standard set of financial statements, you're talking about a profit and loss statement, or perhaps called an income statement, depending on the software package that you have. Those are typically interchangeable terms in the world of small business anyways. And then the balance sheet, those are the two that I always say that if you get those two down, and it is like, if you get those two down, you will have the whole picture, high level of that company. And it's important for people to realize that is those two together, because there are other statements. I mean, if you get into bigger companies, you have statements of retained earnings, which is just, nobody really needs to, at small business level, look at that kind of stuff. Statement of cash flows is important, but I replace that with another system and a process for folks. And the reason I looked to do that is because even for accountants, and I used to teach accountants as well, and in the traditional college structure as an adjunct, and even accountants have a hard time deciphering the statement of cash flows. Right? So it's like, I don't know how we can expect people who don't have an accounting degree, if the people who have the accounting degree are having trouble with it, and it's like, it doesn't really make intuitive sense. More so, if you can believe it, than a balance sheet or a profit and loss statement. In case that's the area that some of your viewers or listeners are in, where it's not making intuitive sense. But the balance sheet is the real key, right? Because if you nail all the stuff down on that, the balance sheet and the P&L, the profit and loss combined, are a closed system. Yes. Right? So they are closed. So you get that one right. At least if you get the balance sheet right, you'll know that in your accounting system, in your book, whatever you're doing for bookkeeping, everything's going to be there. It may not be parked in the right place yet, but at least you have all the data for the most part, right? And so that's real important. And then from there, you can start to look at some traditional metrics. The one that I always look at right away for health of a company from the balance sheet, and it's a traditional accounting metric that you just go out and read more about, but it's a simple working capital ratio or working ratio, right? And basically all you're doing is taking a look at things like cash, they're typically referred to as current assets. Usually it's cash and accounts receivable, and we compare that to accounts payable. And if your cash and your accounts receivable, so the money you have on hand today and the money that you expect to get probably within at least the next 90 days, if not sooner, if not hopefully much sooner, but depending on your business, I understand it can be drawn out. between those two things, if you don't have enough money there to pay your accounts payable and your current liability would be your accounts payable, like that's your vendors, your basic overhead expenses. If you have credit card liabilities, and any other short-term loans, that would be, all those payments, right? And so you do a quick comparison and you see, are you running a spot where you can pay all of your immediate bills with the money you currently have coming in? And, that's a real quick indicator as well of how healthy a company may or may not be. And then one caveat to that, just as an aside, is that keep in mind that anytime you look at the balance sheet report, it's only a snapshot picture of time. It changes every day, every hour, every minute, right? So depending on when you do that, so typically I usually only have, and really the financial statements are set up to be a monthly overview, a monthly report that you're hopefully, you always get it late by its nature. It's a historical statement, so you have to get it after the fact. So it's not good for day-to-day management. It's not good for making quick financial decisions that are kind of on-the-spot financial decisions. But it is good to double check. So hopefully you have systems and processes in place through your company to be able to manage all of that and not be completely reactionary in your business, which we see a lot of people do. Have a system and process in place where you're not waiting on an accountant, a bookkeeper to produce a report for you to be able to make a day-to-day decision that is in good, alignment with your goals. And but use that as kind of the final checklist or report card, as we were saying before, to make sure that all the other systems and processes in between there until you get to that date are working still. Does that make sense?
Oh, absolutely. Yeah. I mean, you have just shared so much knowledge here. And I have so many questions right now. It's not even funny. So I hope you're ready because we're about to go into the final round and I haven't done this.
All
so
right.
With anybody, because you have just shared so much. So I'm going to go in and ask some questions just to break down some of the things you have shared, if that's all right with you.
Okay, sure.
So one of the things that you've shared about is this very important thing of looking at the two very important statements, the profit and loss statement, the balance sheet, right? And when you put two together, it really tells a nice story of kind of what's happening.
Mm-hmm.
Now, this is something that you do as an accountant. If I was a business owner coming into you, you'd be able to look at my financials and sort of give me how I've performed up until the point where the reports come in, right? So if the reports are 2 months old, then you'd be able to tell me how I did as of 2 months ago, which, right, that's kind of what we're looking at.
Traditional accountants that only utilize those reports would be in that very, very spot, yes.
Okay. Now, is this something that folks can use to evaluate companies before they decide whether they're going to be an owner of the company, meaning before they decide to purchase a share of stock?
Oh, absolutely. Yeah. And that's really, if you're talking about, in the world of investment and business investing, if you're talking about stock in the stock market sense, or are you talking about investing in another, what's considered a closely held business, like, a couple of your friends have a, hardware store, let's say, and they want some partners, or, whatever the case is, a small net closely held company. Either case, definitely getting the financial statements and having them analyzed and reviewed are one of the many due diligence steps before you're going to actually, especially a closely held, but even with a stock market investment, excuse me, there are, that is a basic analysis happens there too. Is something that, people like Warren Buffett and the bigger investors do. And if you read some of their, I forget some of the other authors, it's been a while, but if you read some of their material on investing in the stock market and taking these positions in different companies, that's a very, very sound part of their plan. Like, you want to know how these companies are making their money. You want to know how they're handling it. Are they, a simple example, are they bringing on debt like it's no tomorrow? Like, are they in trouble? Or and that current ratio, the quick ratio, like we were talking about before, can they pay their bills? If a sale didn't come in for the next 30 days, can they still pay their bills and that sort of thing? So again, you're talking about a wide spectrum of, or at least I am thinking of a wide spectrum of different companies you can invest in. But yeah, that's definitely a good due diligence point for any business investment.
Well, okay, so you and I are definitely agreeing on that being an incredibly important thing to understand and learn how to use as part of your, as you put it, due diligence, as part of your fundamental analysis of the whether you want to be a part owner or part investor in a company, and that being a large company that is publicly traded or a privately held company that you just place some money and get some privately held shares. um, Both components work equally well and both are crucial. Now, I presume that also just by being able to look at a financial of a company, there's also a financial of a human being, right? Like all of us have a financial statements as well,
Yeah.
hopefully, right? So hopefully we have things to report on the balance sheet and things to report on the income statement. And just like you have talked about of the business, it's important to understand that you want to make sure that your earnings are larger than your expenses. And that's basically what the ratio that you just talked about, the current ratio, is the one that basically gives you that piece of do they make more money than they have to spend within a set period of time. Accurate?
Absolutely. Yeah. And even though the terminology changes a little bit from business to personal, and I'm sure, and probably if any of your listeners have been listening to you or following you for a while, but, a balance sheet for a business is no different really than a net worth statement for an individual, right? That's really what we're talking about. And a lot of the same things that I was already talking about, save for maybe a few that are business specific. But yeah, a lot of those same comparisons and metrics and ratios still hold up on the personal side as well. In fact, I read a book a long time ago, and so long ago that again I can't remember the author, but I'm sure if you do a Google search, you can look it up. And it was all about running your life like a business, and that was the core thinking behind it. Right? Was utilizing the same types of tools and metrics that a business does to be profitable, and have you be profitable in accumulating wealth in your own personal life as well.
Excellent. Now, you have also touched on something that I would like to know more about. And you have said that traditional accountants look at these traditional things, but it sounds like to me that you may have something extra that you do for your clients that maybe not all accountants, all CPAs do and perform. Did I pick up on something or did I miss it?
No, I think you got it. So thanks for coming back around to that. Yeah, no, absolutely. Again, I refer to myself as a classically trained CPA when somebody asks about my credentials. And again, it's because most of the stuff, outside of the basic foundational accounting stuff, most of the other things I learned there do not really apply to the line of work I'm in now, helping and coaching small business owners to be able to handle their finances and drive profits into their companies, and therefore into their lives as well. I mean, that's always the end goal: is how is all this revenue that you're chasing and these customers that you're working so hard to acquire translated to you having a better life? And there's a lot of things along the way from, once the sales and marketing is done and the deal is closed, there's a lot of things in between that stage and the end stage of having it enrich your life and lead you down to a path of being able to fulfill on your purpose, and just in turn be happy, just be able to do the things you want to do in life, right? So yeah, absolutely. We help people go through systems and processes to control their cash flow as soon as it comes in the door. Cash is the lifeblood of any business and really of any wealth accumulating entity. And I say that to mean individuals as well. If we don't have cash, then there's a lot you can't do, right? So cash flow is crucial. And that's where I was talking before about this accounting idea of the statement of cash flows. And again, it's really not a very useful tool. It is in that fundamental analysis we were just talking about. That could be useful there to figure out how a company uses its cash. But again, it's not very intuitive. For business owners, we set up processes to allow them to have a structure on, as soon as that dollar comes in the door, what are you going to do with it? Where does it go? And we have several buckets that people throughout the year don't typically think about, such as, look, I still get owners coming to me. I had one not too long ago who had been in the medical field for over 25 years and pays herself a salary that's below the poverty line as a medical professional in private practice. So we get all kinds of owners underpaying themselves, skipping paychecks to keep the lights on or to make sure their employees get paid, which are all, by the way, these things that I rattle off. Sometimes I realize people are, if you've lived through that or experienced it, it's hard to see that was the reality of the situation at the time. But there's also, very core underlying causes that can be corrected and corrected for the majority of the future, right? I can't say we're going to guarantee because there's some other variables in there that have to happen. But for the foreseeable future, if there's no steady decline in revenue, you should be able to set yourself up for success and never have to be in that position again. So people who feel cash crunched when payroll comes around, when tax payments come around, whether it's sales tax or payroll tax or the personal income tax, and just plain profit, and I don't know if we'll get into it later or if you want to get into it now, but just looking at core profitability and the fact that if I said that term profit in a room of 20 people, everybody would probably have their own slightly different idea of what profit really is and what they should be looking at and where to find it, right? And so anyways, leading people through that whole process of cash flow management, real time, and that's a critical element as well, right? Because again, like I mentioned before, you don't want to have to wait. If somebody comes to you, there's an opportunity that presents itself. You don't want to have to wait for the CPA to call you back in 3 days when that person is ready to, sell or close the deal with you right now, and this deal's going away, right? You want to have some sort of idea, even if you're not. Look, you don't have to be a financial expert to be in tune with cash flow and the profitability of your company. There's a very simple system you can set up to handle all that. And then you just got to know where to look. You look, you make the call, right? So it's real time. It's like an instant feedback loop for your business as well. So before you get to that financial statement report card date, like what did you love to know in school? If you were 2 weeks into the semester and you were already headed for an F or a D minus, wouldn't you like it if the teacher pulls you aside and says, "Hey, you better look at this because you're going nowhere fast," kind of sort of thing, right? That's what your instant feedback loop on your day-to-day management of your cash flow should be telling you as well. So it's not going to exactly tell you how to correct everything, but it's going to give you that real-time, feedback that says, "Hey, I better go pay attention to this and correct it before it becomes a really big issue." And it can also do the opposite. It can also show you where you're strong and say, "Yeah, let's keep doing more of this because this is working and I don't have to wait for somebody else to tell me. I'm not going off of a gut feeling anymore. It's data-driven, but really easy to get to." So in terms of profitability, then there's more, but that's the basic profitability setup, and then we go on from there. But there's a lot we can do that the face of accounting and accountants overall in the industry is changing rapidly, and so there's a lot of evolution going on the past several years, and will continue for sure.
Oh, I am certain that it will continue to change, and for me, people tend to, you go to conferences and you listen to some of the speakers, and some are definitely better than others. But they typically go out and they make two kinds of jokes. They make fun of attorneys and they make fun of accountants. And interestingly enough, those are the two individuals, two advisors that if I was to say, for your business, for your life, if you're looking to improve your financial, if you just find just two, those are the two you actually want.
Mm-hmm.
You want to have legal help and you want to have somebody who understands accounting. They can advise you, they can teach you. And, one of my pet peeves is individuals as well as business owners, and I'm sure you feel the same way, who only go to see accountant and talk to them once a year, typically on, March 15th, and
Mm-hmm.
they want all of their taxes covered by April 15th, paid off and taken care of. And if you end up making the call and or sending them a bill, or depending how you do end up doing thing, and they see that they actually owe money, they get angry at you, right? But they haven't done
Yes,
anything up until that point to look and fix stuff. And
absolutely.
I would be the first person to say, you want to have a relationship with your accountant. And
Mm-hmm.
it sounds like that's something that you do with your clients where, you and I don't have to talk every single day or every Friday night, but seeing each other at least once a quarter would be incredibly helpful in order for me to turn my business, because I presume that if I was to show up in quarter one and you're looking at my report cards and they're not lining up and they're not going with the story of what I want to achieve, we have plenty of time to fix things. Would that be correct?
Absolutely. Yeah, couldn't agree with all of that you just said even more. Um, and it's a little bit frustrating. It's a product of the industry, right? The industry for years has kind of driven people because of billing practices and a lot of other issues. It's driven people to only want to come talk to them uh, once a year. And a lot of times we would get the same type of deal you're talking about. Back before I completely shifted and became solely an advisory business who does the compliance stuff for the advisory clients, right? But solely an advisory business. And yeah, before that, we'd get the people come in that it's the shoot the messenger syndrome, right? And a lot of times I began to really sympathize with those people. And it's not just lip service, because they really didn't know how else to act or how else to do it. And they really did think, and there's still people to this day that really do think that look, when you go to have somebody file your tax return, depending on the level of complexity, but let's say it's a really simple return just for sake of this discussion, the person preparing the return is really just the middle person between the middleman or woman between you and the government that you have to file the tax return with, right? At that point, that's what they're kind of relegated to, is the middleman. And so, yeah, there would be countless, and that's really what started to, when I got more business clients and saw things that were going on and the same types of issues kept coming up for them. And they would be the same way, let's come sit down once a year, do the taxes. Oh, by the way, I had, this happened last July. Is there anything we can do about that now? Or am I going to have to just pay the tax on it? And I'm like, well, you would have told me in June, that would have been awesome. But now, since we're in March of the next year, you're probably just going to, be stuck. So there's that. And, finish that thought. And they say, okay, and now while I'm here, let me rattle off about, 20 or 30 other questions that hopefully you can answer within our hour time block so I don't have to get charged extra. And really, the whole deal about billing them or not billing them is not the issue. It's like, how much advice, if you come up with a laundry list of questions once a year and try and rapid fire them to who's somebody who's supposed to be your most trusted advisor, or at least one of them, how much value we're going to get from that conversation, So all that to say, when I started seeing all of these things popping up in these business clients is really what drove me to start, what do you want to say? Start being a better messenger. Start coming to them and saying, look, I know this is rough now. If you want to fix it, here's exactly what we have to do. Let's meet, let's not wait till next year to meet. Let's meet next week. Or, let me put you on the first slot right after tax season. I started to make that shift into being more in the advisor role, even for these smaller companies. I've never been a huge, I'm not a huge regional firm or national firm or anything like that. But I work with clients all over the country. And because I've developed the specialty of, all the processes we've been talking about, but at the core of it is always keeping the line of communications open all year long, right? So like our clients know, like we boil everything down to, one price. We got to set it and forget it. You pay it, you're good. And you literally could. You talked a little bit ago. I literally make that joke all the time with clients and say, the way my agreement's set up, you could really call me every day if you wanted to. I know you're not going to, and I've never had to eat my words on that promise. But that's how loose the agreement is, because if something as big is happening, where we're going to set up these systems so that you have your real-time feedback loop. That's great. You don't have to wait for a bookkeeper. You don't have to wait for me. But at the same time, if something big is coming up that requires a little more, heavy analysis or something that you're not, and you want some input, call or email, contact us first before you get too far down the road, because there's a lot of things that we can affect before the fact and almost nothing that we can affect after the fact. So it's crucial to keep the communication line open. That was the first thing I did, was scrapped the hourly billing and scrapped, that whole traditional model, and just went to, you got a question, you're paying me this for a year. You got a question, ask it, right? Because I want to know, that's how I can deliver value to you, and that's how I can help you.
I love that, and I love that methodology as well. And I have to share a story with you, and I guess outing myself here publicly, but this is quite a few years back. I decided to do something stupid with my 401k, so the retirement plan here in the United States, and pull the money out. Now, clearly, I don't qualify for the withdrawal without penalty. I didn't squander the money. That's the good news is, at the end of the day, I did okay. Yeah. But I never called my accountant before making the decision to go do something. Mm-hmm. And of course, end of the year came and a giant bill showed up. And, he sent me a thing. He's like, hey, you did really great, but you owe, I don't know. It was a couple tens of thousands of dollars involved in taxes that my eyes just popped out. And it's like, well, you did this and there's nothing I can do for you now.
Right.
And that was definitely the light. And I will tell you, that was such a painful lesson for me that now I literally call him every time there's a big decision to be made, especially if it's something that I have never done. So before I go out and do something, I pick up a phone and I call. And it sounds like you have set up your practice for people that are exactly like me, who are saying, you know what, I got burnt once. I'm never doing this again. And for those of you listening and who have companies, I've seen some of the stuff that Eric does, and I've talked to him ad nauseum at a few different events, and he knows his stuff. And so if you have a business, if you're looking to improve your financial stuff, give him a call, sign up. We didn't agree that I was going to promote him. I don't even know if he was going to take you. I have no clue if he has space to take more clients. But what I'm saying here is it's so important to set it up. And it sounds like he sets it up in this amazing high value thing where it's a one-time payment thing, however he sets it up. And you can literally call them all the time. My car broke down. I had to figure out what to do. And in the back of my head, there's always the tax consequence. And I try to monetize everything. In that book that you talked about, I don't know the name, but I'm going to have to research it, because I try to run my life as if it's a corporation at all times.
Right.
And so, I have to buy a car. My first thing goes, I got to call my CPA and find out the best way to buy a car. And that's
Exactly.
something I have you ever received a phone call from a client asking you, hey, I got to buy a car. What do you recommend? What do I do?
I get all kinds of questions. With that type of policy, you got to expect all kinds of questions, and definitely, and there's questions that I coach people along and say these are some of the more common things that we can help you with. But whatever you run into, and look, you might call up or they might call up and or email me, and I just say, I can give them my 2 cents as far as not from a business or tax perspective, because sometimes there really is nothing more value-wise that I can add to that. But as far as like my car, sure, there's a lot we can talk about. Going on vacation, right off part of that. There's a lot we can talk about. Um, you know, I got to I want to send my kids to college, private school, a week-long horse training camp. There's a lot of stuff we can talk, right? So a lot of these things that you wouldn't expect to have either a business or a tax consequence actually can, and if you structure things right ahead of time. So that's why we're constantly asking people, and one of the first things we do when we bring somebody on is ask them about not only foreseeable expenses in the next 12 months, but what a lot of their goals are as well, not just for the business, but for themselves personally. Like, what are they working? And I want to have a close relationship with their financial planner as well, so that, if they'll work with us, so that we stay on the same page. Because, when you're talking about all the things we've been discussing, right? Profitability of a company, generally to get wealth accumulation. It's also to serve people, don't get me wrong, right? But in the context of what we're talking about here, we just keep it there for a second and focus on the financials, because, at the end of the day, it really doesn't matter like what your purpose is or how noble your cause is, right? Like, there's a lot of great organizations and foundations out there, and Make-A-Wish, United, you name it. All these organizations that have great causes, but without capital and without money flowing through them, none of their goals or causes get fulfilled, right? They can't do their work. And so your business is much the same way. And if you're a true altruist at heart and you're in business, and I've had people tell me this, right, a lot, that they're in business, they don't really, they don't care about the profit. That's why they are coming to talk to somebody who is a profit coach, who has the promise that I shared before. And it's like, you have to care about the profit at some point, whether it's in the context of you're in this because you love what you do so much that you want to continue to serve and impact as many people through your trade or profession or service, or the product offering that you have, or whatever it is. You want to impact as many essentially customers or clients' lives that you can. And if you want to provide for your family, if you have these other causes, charitable foundations, or whatever that you want to support, all of that, where do you think that's all going to come from? It comes from the after-tax profits, or sometimes pre-tax profits. It comes from the profitability of your company, if that's your main wealth accumulation tool, right? Mm-hmm. So, yeah, and I'm sorry, I went on that little bit of a rant, and then I lost my space on what we were talking about immediately before that. But I'm sure we'll come back around. But
I do agree with you, Eric, and on the whole piece. And I like to look at it as, so I've spent a lot of my time teaching people, obviously, about money and how to run their own life like a business, and why they should start a business to begin with. But I've also done a lot of stuff in higher education and teaching folks. And one of the messages I always tell to my new teams when I'm working with them and developing them is that if you don't help yourself and keep yourself safe, you can't help other people. And it's same thing goes for the company of what you're talking about with that profitability piece, whether personal or company or business related, is that if there's no profitability for you and you're struggling, you're not able to help other people. So if you are hurting, you're not able to help others. So you have to do well enough, because the better you do, the more ability and capability you have to help other people. And that's something that I really appreciate you sharing and talking about, that, you your reach can go so much higher when you're able to do some things that actually make sense. And being fulfilled in heart to do what you love to do obviously feeds your spirit, feeds your mind, and so on. But you also got to feed your physical body, and that, unfortunately, to this day, it still takes capital. And so to do that, you have to work on profitability. Now, I'm
Yeah.
curious to see, because you talked about some of that stuff, and I love results, and I love always asking mentors and coaches and people that I work with to share a recent example of a success, because that typically is able to tell me of, is this person potentially for me?
Sure, yeah. And I've got a couple of them because there's such and they'll be short, but there's such a wide spectrum of people that show up in problems. So let me just give you two quick examples. There's one I mentioned her not too long ago about a doctor who'd been in private practice for over 25 years and was paying herself, again, below the poverty line, which I'm just saying that to not disclose the actual number. It's definitely with poverty line, 40 or 45,000 or whatever that is per year. You think about a medical professional that's been in business that long, not paying themselves a living wage for most of that time. And not only that, but they were funding the practice, excuse me, they're funding their business through her husband's salary. So not only was she not accumulating wealth, but it was detracting, it was taking away wealth from the whole family picture even more so, because the husband was the prime, at that point, the prime breadwinner, if you will. He was bringing in the most, and they really didn't have the ability to be doing what they were doing and borrowing from themselves to fund the practice. And it was just kind of a black hole, so to speak. It was just this never-ending cycle. And on top of all that, she had the IRS calling her a lot with some issues there. And so, and really that came from, it wasn't even a personal income tax matter. It was related to the business. And if she would have had that instant feedback loop that I talked about earlier, excuse me, that I talked about earlier in place, she would have caught that issue a lot faster and probably not had the IRS calling at all. But it took us 8 short weeks to put together the game plan and help her kick it off, implement, and get her to a spot where she could continue to implement the system on her own without somebody like me needing to be there. And she had a game plan for getting herself paid 6 figures as opposed to her $45,000 per year. They had a plan for drawing out some additional money. We treated that as much as we could count the money coming from their personal source before in the last couple of years as a loan that they had a goal of repaying back. So not only did she want to pay herself like a doctor, she wanted to pay back her husband and their family unit, right, for those amounts, and setting up that process, that system in place to have the real-time feedback loop. That was huge for her. And so in 8 weeks, we kicked all that off, implemented it, got the IRS off her back, set her up with a game plan to rectify all of those things. So there's an example of somebody who is a little bit, it's just not running profitably. Let's just put it that way. So the other quick example I have, so some people come to me and they feel like they're sitting really well, and by all basic measures they are, as far as their cash flowing, their business is sustainable, they're getting a lot out of it, and their main issue at that point is taxation, right? It's income tax. And so, generally, like, we had several clients this past year, but one in particular was a service professional. Like, I spend 95% of my client base is in the professional service world of some sort, whether they're licensed, like I've been talking about medical practices, or I've got marketing agencies, coaches, consultants, online marketers, and those types of people, or companies as well. But some sort of service or not perhaps a physical product. And so a lot of them this past year, they were having a great year. And the income taxes, so I mean, we work with these people throughout the year, and our average first year savings for somebody in that position where they're profitable, they're cash flowing well, depending on the size of business, of course. But the one I'm thinking of here, I mean, we just wrote a tax plan for and projected about $60,000 worth of tax savings, which, to put that in context or in perspective, because some people are going to hear that and be like, holy cow, that's, I'm not even paying $20,000 in tax a year, and not be able to conceptualize it. And the others are like, gosh, I wish I could, I wish I could only pay $60,000 in tax. You get those people too, all across the spectrum, right? This person saved $60,000 in tax, which was, if I remember right, about 30% reduction is what that represented in her overall tax bill. Okay, so typically people that go through the more advanced tax planning process are in there upwards of $20 to $50 or more $1,000 per year, meaning we're putting together a system and a strategy, an overall strategic picture for them, and helping them implement it, and that serves them, unless they have some huge drastic changes, but most of the time they just need to be tweaked a little bit. And that serves them for 3, 5, 10 years, just depending on their evolution and progression. So you look at the return on investment of some of these things, and it becomes like this $20,000 to $50,000 annuity almost, right, for the next 5 to 10 years. It's quite powerful. And some I talk about advanced tax planning, even the smaller, what I consider the smaller clients with the more, what I consider the basic tax planning needs, which again, a lot of people are not executing. Even they, I don't see too many tax plans that out the gate can save an established business around $5,000 to $10,000 per year, right? So that's kind of our marker on whether we decide that you're ready for a strategic plan or not is how much you're able to shelter legally, of course.
Of course, everything here that we're talking about is legally, and a lot of the strategies that exist within the accounting principles are actually set up within the IRS code, at least here in the United States, and I presume that vast majority of the countries also have a particular taxation code that individuals who are experts within that field are able to understand, look, read, and then translate to the common folk like me and like most of the viewers. Now, I do have one question for you. And, that is one of those things that, because you were talking a lot about the financial strategy and tax strategy, how much tax strategy, how much financial strategy are you able to do for somebody who's only an employee?
Yeah, that's a good question. So being an employee, so if that's your only source of income, W-2, it really is rather restricting. There's just simply not a lot there, right? There's not a lot of places to look. You have some of the simple things, which a lot of people hear about, maximizing. At that point, you're down to talking about maximizing work benefits, 401ks, and that sort of thing. Other fringe benefits, because most of those are given on a pre-tax or offered on a pre-tax basis, and that's really your only spot for major deduction. There's all, of course, little things that you could do, but you're really quite limited. And so a lot of times when I don't have conversations like this too much with potential clients anymore, unless somebody kind of, because I make it pretty well known that we work with companies so that we're not, leading somebody down the wrong path when they could be searching out the right solution for them. But, when I got a lot of those and still in a casual conversation, I'll say that the best thing you can do if you are a high W-2 income earner, or even an average W-2 income earner, and you want to affect your tax position, is to look at the areas where the two areas where the tax code allows the most opportunities, and that is either small business ownership or investing in predominantly either other businesses or real estate.
Yeah.
Right.
And that's
investments and business ownership. Now, it doesn't mean that you have to, I'm not telling people to quit their job tomorrow and go start a business so that they can get tax breaks, right? But it starts out something as simple as taking a hobby that you wouldn't mind getting paid for and considering, do I want to run this like a business, and what type of benefits does that open up for me, right? If there are things you're doing, I always look at a lot of the strategies, even when we're talking about that $5,000 to $10,000 to $20,000 in savings, we can knock out a lot of that with money that people are already spending. So it's not like, because any accountant, anybody can get you more write-offs, right? They just tell you to go out and buy more stuff. Not good tax planning, not very strategic at all, unless they are actual investments that are going to produce more than they cost.
Yeah.
But so aside from that, and thinking that we all have that one down, there are so many little things. We talked before about vehicles, about vacations, about cell phones. We could talk about kids'
Computers.
support. Those are things that you're already spending money on.
Yep.
And if you can position them in a way that's not going to take a huge chunk away from your quality of life, however you want to set that up and define it, and then you can actually get a tax benefit for it. You can convert it from an after-tax dollar, which is where you've earned the money, you pay the tax, and then you spend what's left. That's what most W-2 income earners do. And as opposed to a business owner where you make the money, you spend what you can, and then you pay the tax. There's a distinction there. And so when you spend the money before you pay the tax, those are called pre-tax dollars. After you pay the tax, they're called, what you have left over is called after-tax dollars. Anytime you can legally shift an after-tax dollar to become a pre-tax dollar, you're winning, right? And the only other the other thing too is that the reason we put so much emphasis on tax planning, it's actually where I started. I've been doing that now for well over 11 years. And that's where I first started branching out to be an advisory or more of an advisor and less of a traditional accountant. That's where I started with strategic tax planning, taking courses, learning as much as I could about how all of those pieces of the puzzle could fit together, and then being able to walk clients through that. And so we spend so much time talking about it because of two main reasons. In case people are beating the tax horse down quite a bit. But number one, guys, as a person, an individual in the United States, and that's where I practice. So I'm sorry if you have listeners outside of the United States, but for the tax talk, I'm only talking about the U.S. There are plenty of studies that show that taxes are by far your biggest personal expense on an annual basis. More than food, clothing, and shelter, your basic necessities combined every year. So it makes sense then to focus, if you're looking at, all the talk in the world about personal finance and budgeting and investing, if you're going to go through those exercises, it makes complete sense to focus your efforts on the areas where you spend the most. Yeah? Yes. So that's one thing. The other reason why tax planning is really powerful when done properly is that it guarantees results. And what I mean by that is think about a consultant who goes out, and now, and I'm not bashing anybody, I know both of these are needed, but think about the difference between somebody who goes and puts together a marketing campaign to try and bring in an extra $100,000 of revenue in their business, and what kind of guarantees are in place for that. You may have very high probabilities depending on your marketing savvy, right? And how much experience you have. You may have very high probabilities, but there are no guarantees in that arena. On the flip side, if we could structure your business a little bit differently, maybe show you how to write off, that week-long horse camp or your daughter's braces as a business expense instead of on the personal side where you get no tax deduction, and generate that $5,000 to $10,000 to $20,000 in savings. As long as you set it up right, the result, the process is in the tax code. It is guaranteed. You set it up right, you take the deduction, you're going to get the savings. It's that simple. Right?
You know what? Listening to you talk about this, it's like listening to my favorite song over and over and over again. My little heart keeps beating so much faster when you talk about it because I always keep talking and teaching is that everything you do when it comes to money has a tax consequence. And
Mm-hmm.
tax consequence is your largest expense you will ever have here in the United
Mm-hmm.
States and vast majority of the world. Here in the United States, we're actually blessed to have one of the lower tax brackets when it comes to income and paying of it because there's countries in Europe that I know of that taxes are as high as 60 to 80%.
Yeah. Ouch.
60 to 80% of your income is actually taxes.
Mm-hmm.
Now, we don't have to pay those crazy taxes here, but even still, when I have to pay 25, 30, 40%, that's a huge chunk of your time and money. And the reason that Eric was talking about, in case you guys have missed it, of why it's important to spend money before taxes because reduces the taxable income, right? So if
Mm-hmm.
I spend 20,000, right, before I have to pay tax, and all of a sudden now my taxable income is 80 as opposed to 100, I have automatically reduced the amount of taxes I have to pay. Did I get that correct?
Yeah, absolutely. Yep, that's
Okay.
exactly right.
Perfect. So it is really it is one of those things that if you focus on proper tax planning and strategic work and work with somebody like Eric, you're able to literally guarantee yourself more money. That doesn't mean you earn more money. Potentially you could. It just means you get to keep more of what you earn. And the reason I
Exactly.
had asked you, Eric, about folks who are employees only is because I wanted you to go exactly where you went. And that is to talk about the whole concept of, if you're only employed, there's only so much that can be done. But
Mm-hmm.
the moment you start a business, the moment you start investing in certain things, now buying a share of stock, it's not going to help you. But
Yeah.
buying, right, being the owning businesses, owning real estate, which I would argue also is a business all on its own, or has potential to be,
Can be. Yeah.
that's what's going to be able to lower the tax bracket. And so for viewers here that have a hobby, that have a passion, they're doing some stuff on the side, make it into a business, run it like a business, and then find somebody like Eric to help you on the planning piece. Not all of us are born to be accountants and CFOs, but every company needs them. And so if you can't hire one that you're going to pay full time, you find somebody like Eric and his company, and it sounds like, and correct me, Eric, if I'm wrong, you guys in many ways operate like a CFO, right? Like I hire you literally, and I can call you with any financial question.
Yeah, that's funny you bring that up because it used to be one of our taglines in the past marketing campaigns and how I position myself. I don't have it out there anymore, but what I did, the goal was to take the high level accounting and finance department that all of the large corporations and even the large private businesses are able to afford, and bring that down to the small business level and put that into somebody's back pocket in a very valuable but still affordable way, right? And we show people how to acquire, how to obtain all of that. So yeah, CFO. I think I don't know if somebody else took it. CFO in a pocket or CFO on speed. Yeah, whatever. I'm not. That was an idea, but yeah, it was that exact concept. Was right how we positioned it. So, and then it's very right. If and look, it was just, we're coming from this at an angle that we know that if you do the math, right, four out of five startups fail within the first 5 years, predominantly due to some sort of money issue.
Yeah.
It's not necessarily just taxes, and we just came up with that discussion, but it's some sort of money issue. And beyond that, we know that over 80%, it's something like 83% of the study I saw, where of existing companies are surviving check to check or deposit to deposit, which means that if they had a dry spell or a bad week or a bad month, they're just that far away from being out of business potentially. And so, that's, if you calculate all that, it's over 95% of every business, right? And only 5% of them are doing exceedingly well. And so that's what we're out to. That's what I'm out to fix and make my mark on, because we all know small business is the biggest economic driver, right? That's where the action is at. That's the biggest producer of jobs. It's nothing else. It's the small business community, and we see and hear and know that they're struggling. And it doesn't have to be that way with some better guidance and filling in the gaps on what you don't know, whether it's through a long-term relationship or just picking up on some systems that can help you, that you can implement on your own, that can help you moving forward as well.
Yeah. So we are slowly but surely coming well over our time limit as I check the clock. But that's only a sign of a great guest and interview. And, I hope you can tell, but I've been having so much fun, because anytime we talk money and how to make more and preserve more, I get very excited. I am like a kid in a candy store right now. But I do always ask all of my guests two very important questions. I am a proponent of continuous education and learning. And I find that one of the ways, the cheapest ways, maybe not the most efficient, but definitely the cheapest ways, is through reading books. And so I wanted to find out of what is maybe one book that is either your favorite or something has left a lasting impression on you, or something that you recommend to a lot of people.
Sure. A lot of people ask me about business growth, especially works for almost any business, but especially in our world of service professionals, white collar service providers. A lot of them are, just like the traditional accountant or attorney, trading time for dollars, in a billable hour sense. And so a lot of service professionals don't fall too far from that. But this book will help anybody out in any business. And whenever I get asked about business growth, I always refer people to a book that I've implemented numerous concepts from and still do to this day, even though I read it probably 4 or 5 years ago. It is called The Pumpkin Plan. Pumpkin Plan is by a guy named Mike Michalowicz. Not going to spell the name for you. Just go search The Pumpkin Plan, and when you see Mike, Miko, whatever, you'll get it. And I know Mike personally, and so he laughed at that. He's got a great sense of humor. But there's a lot of things there's a running analogy in that book between business growth and these farmers that Mike noticed were always growing the biggest prized pumpkins and breaking records with them, right? Breaking world records because they have these colossal pumpkins, where these other pumpkin farmers were barely struggling to survive. He's starting to pick up on the analogy.
Oh, yeah, absolutely.
We can transfer that to the business world. So it goes into a lot of that and gives you some very practical steps for business growth and making sure you're growing and running profitably as well. So it's a great read. I highly recommend it. And I highly recommend, even if you're not an Audible or an audiobook person, get Mike's audiobook, because he reads them himself. And I shouldn't speak for everybody. I'll just say I love his sense of humor, and he injects it into his story, into its read. It's not a dry listen at all, but it's a good read as well.
Okay, awesome. Well, thank you very much. And yeah, so for those of you that like to read, and I'm not talking physically read while you drive, the Audible and the audiobooks are a great way to create what some call the automobile university or a car university, where while you commute to work or wherever it is that you go in, you're able to actually leverage time and pick up new things. And so, final question for at least this episode is, where can people find you? Where can people learn more about who you are, what you do, and potentially consider, asking you to be their CFO and save their company?
Sure, yeah, great question. Right now, probably the best way, I'm on most of the regular social channels, but probably the best way to get on the radar and get some free gifts and downloads and things of that nature, so you can start to see a little sampling of what I do is over to our website. It's doublemyprofit.com. And you can sign up there. And like I said, we'll send you some free gifts for signing up. And I'm going to consistently be adding to that bucket. So you'll get more gifts and things from me in the coming weeks and months. But that's our first point of contact for a lot of folks. And see how we operate, how I do things, what my philosophies are on a lot of this stuff, and then decide whether you want to take that. It'll be valuable if you just implement the things that I share with you for free, or you can decide to reach out in a number of ways I can share with you through that channel as well. But doublemyprofit.com is the best channel for reaching out.
Awesome. Eric, it has been a true pleasure and such an honor to have you here. There's so much more I want to ask you, but we're running out of time. So I hope you will consider coming back so we can maybe dig in deeper and continue to educate folks and helping them out. And for all of you who are looking for ways to double your profit, to increase your productivity, to start a business and don't know where to go for accounting help and for somebody to help you around your financials, consider visiting Eric's website, as he will likely be able to do exactly what he says, double your profit.